this is a series. This is a part of the series that we have at WRC have initiated on the program, on various programs on auditing standards. And we have just completed a refresher course on the basic standards on auditing. Now we are moving into more specialized fields, and today's lecture meeting is the first of that series of lecture meetings. We have one more tomorrow, then we have on 20th, 23rd, and we have one also on, I think, on 17th. So please make sure that you do attend all of these. See, the auditing standards, as I was discussing with Shreyans Bhai, our today's faculty, are a very, very important part of our practice, but an ignored part of our practice. So our aim at WRC has been to create a basic awareness regarding the standards on auditing, which are there for a lot of types of works that we do, and they have which have applicability in various situations in our daily routine practice. And it is important that we keep in mind or be mindful of them, that at least they are there, and then when required we can refer to them. So with these few words, I welcome you to this lecture meeting on standards on auditing, part 1. May I request all of you to come to attention for the ICI motto.
Yaesha sukteshu jagrati, Yaesha sukteshu jagrati, Kamam 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 pursho nirvimanaha tadeva shukram tada brahma tadeva amritamuchyate tasmin lokaha shataha sarve tadunatyati kaschan etadvaita
Thank you, everyone. Again, I also welcome CA Pinky Kedia, Regional Council Member. Welcome, ma'am. So we have with us also our Chairman of WRC, CA Murtuza Kachwala, and we also have CA Shreyans Ravrani, our faculty for today. I will be introducing him later. First, Murtuza bhai, your welcome address.
Thank you, Rahul. A warm good evening to all the participants, and I can see 600 plus participants who already logged in. So huge round of applause for each and every one of you. Thank you for joining in such large number for this series on auditing standards. Let me first thank the chairman of the committee, Rahul Parekh, and even Chintan Patel on the auditing accounting standards and the ethical standards. Really very good work being done by them. A lot of programs. So Rahul bhai, thank you for all the good work that you're doing. Let me also recognize presence of Regional Council Member CA Pinky Kedia. And to Shreyans, let me thank you for sparing your valuable time and deciding to share the knowledge with all the participants, Shreyans. Thank you. To all the participants, to my mind, the auditing standards form the basic foundation. And I think in the current regulatory environment, it is very important that we ensure that we comply with the auditing standards, the ethics are in place, and also comply with the accounting standards before you put signature on any piece of paper. Especially so when we do the financial statements, whether it is under the Companies Act or the Income Tax Act. And why do I say this? Because world over, everyone is talking about trust. And I'm sure some of you would have attended the World Congress of Accounting, which happened in November in Mumbai. 7,000 participants came from across world and 123 countries participated physically in Mumbai. And the theme was enabling trust or building trust. So, which means that the moment we put signature on a piece of paper, every stakeholder who uses those financial statements, they should get a true and fair view. And we should do a bit to ensure that everything is reflected properly, either by way of notes or by way of a qualification or whatever address. Now, friends, even before we go to the 700 series, which is reporting on whether it is a disclaimer or reverse opinion or emphasis of matter, but even before that, I think the first and the most important is getting a proper engagement letter. And now the essays even talk about scope of engagement, objective of the assignment, and getting a proper engagement letter. And unfortunately, in many of our cases, our engagement letters are like so miserly worded. We say you've been appointed to carry out audit under the Indian Income Tax Act for the year ended 31st March 23. That's it. And if we are little more, what do you say, liberal, then we add for a fees of rupees 25,000. That's it. But the question is, what if something goes wrong? You've done an audit and then a fraud is detected and the client feels like you did not report it or you did not do your work correctly and the client files the case on you. Or what if the input credit was taken wrongly for the GST and the client says it was your mistake and you pay the interest and penalty now? 1 crore of rupees. Will you be liable to pay that much? And maybe possibly you can get dragged to the court of law. But then what stops us from adding one paragraph saying that I'll do to the best of my ability, but still, if there is no negligence on my part and something goes wrong, then my liability will be restricted to the amount of fees received by me till the date of the happening. Can we not add that paragraph? Because there's a contract. The engagement letter is a contract between two parties and both have signed. What if your client goes and files the case in Delhi in a court of law? Will you have to take the flight and go to Delhi every time for the hearing? Who will incur the cost? We. Should we not add into the engagement letter that if something goes wrong, then the arbitration or even the court will be the court of law in Mumbai? And the formats, hard copy, soft copy are given in the standard on auditing. There's a book which is available, soft copy is available. So we need to download, we need to read. So I'm saying, sure, that way there's an essay on sampling. How many samples to select? Do we have a sampling guidelines for a firm? That what level of clients, how many samples will we select? Then again, samples have to be selected on judgmental as well as statistical sampling method. Then we are required to do analytic procedure now the whole population. Do we do that? We are required to keep documentation and working paper. So there are so many of the essays. And I'm sure today, Shreyans is covering on two things. Responsibility for the joint financial statement if they are joint auditors. And relying on the work of others. Okay, 600. Again, I may not be an expert and I use the work of a technical consultant in a real estate company or in a telecom company. But that does not mean that I've just appointed a technical consultant and I hang my hat and say, okay, what he did, I do not know. Sorry, we are putting a signature on it and we'll have to give the scope, review them, evaluate, check. I don't know. So there are certain duties which are casted on us. So what is required to be done, what is not required to be done, I'm sure Shreyans will cover in more detail. Let me not touch that. But my, again, one point or one advice to everyone is, friends, we should read all the auditing standards and we should ensure that we comply with them in the best possible manner. Because now in the report also we write that we comply with the auditing standards and the accounting standards. So I think with that, again, I thank you. 708 I can see virtually attending. Thank you very much for attending in huge number. I think it is the number of participants who attend and the quality of participants which encourage us to keep on doing the programs again and again. A big thank you to Rahul, Pinky for all the good work which is being done, and Shreyans, thanks to you for joining us as a faculty today. Thank you, and Rahul, over to you. Thanks.
Thank you, sir. So as the chairman said, extremely important for all of us to take note of this. Yes, a lot of us may not be doing joint audits, but yes, we would be using work of others. So somewhere or the other, we need to be aware of what these standards on auditing are, and then we need to apply when the time comes. Now, without taking up much more time, I would like to introduce our today's faculty, CA Shreyans Ravrani, a fellow chartered accountant, a partner in assurance practice of SRBC and Company LLP, which is a member firm of E&Y Global. He has more than 17 years of experience and specializes in assurance services and financial statements auditing under Indian GAAP as well as IFRS. He is a certified data analytics expert and an IFRS accredited professional for the last few years, and also a trainer for data analytic tools. His experience includes listed entities across various locations in India, including in power sector, refining, pharmaceutical, etc. So yes, you can imagine he has a lot of experience, and especially for today's topic, I think his contribution would be add a lot of value to our knowledge. So welcome, Shreyans Bhai. Thank you for accepting our invitation, and over to you for this session. Thank you.
Okay. Thank you, Rahul Bhai. Thank you, Chairman Sir, for the introduction and setting the tone. I hope I am completely audible. And yes, just let me know once my slides are also visible.
Can you just start the share screen?
Yes, just share.
Yeah, you're now visible. Absolutely visible.
Perfect. Okay. So good. I think once again, thanks everybody for joining this session on evening. And so precisely we have 4 standards, one on the joint audit, the one on the using the work of another auditor, and then using the work of internal auditor and auditor's expert as well. Just as a matter of protocol, in case if you have any questions, you can put into Q&A, or you can raise your hands at an appropriate time. I will raise the questions, or maybe at the end of the sessions, we'll raise all the questions. I will try to be as participative as possible, as practical as possible. And as Rahul Bhai said, or Chairman Sir said, that we'll try to cover the basic part. Here, the objective is not to make you an expert out of this session, but at least familiarize you with what are the basics when we use others in our audit. Before I jump into the session formally, just let me tell you one thing, that in today's changing world, especially in last 10 years, auditing is not a subject of chartered accountants only. When I mean that, a chartered accountant has to take the services of a lot of other experts. Whenever you go for audit before 20 years, there was a meager trial balance, a financial statement, some entries, and some vouchers. That was all the audit about. But over last 25 years, the way the business has developed, the way economies has moved, now enterprises has a lot of new things coming into the picture. And with the Ind AS coming in, fair valuation of assets, fair valuation of derivatives, and so on and so things are becoming more and more integral part of the financial statement. And obviously, we are also a human being at first, and then chartered accountant later on. So you are not expected to be an expert in everything. I mean, you are not expected to be a valuer of derivatives, a valuer of property, plant, and equipment. You can do actual valuation. So obviously, you means a chartered accountant or auditor, and the management always rely on the work of the other field experts. And as Chairman Sir say, that when you're doing audit of technological company, there are different kind of estimations or different kind of numbers which comes into the picture. One of the simple example of the auditor, or one of the simple examples of the using the work of others is
Shreyans Bhai, sorry to disturb you, but I want to clear all the participants. Please don't write your name and membership number in chat box. There is no need. Whenever you are registering yourself, your number is there. You will get the CP credit. There is no need to put your name and membership number. Yeah. If you will put there, we will lose the question or query if anybody asks. Yes. So please, I request all the participants, please don't put your name and membership number.
Same thing, Chairman Sir also said that it might not be required, but I think before that, a lot of people have started just following the trend. See, this is also I would say this is the kind of love and bolding we follow as a chartered accountant. Once a person follows a lead, we all follow it. Okay.
Sir, so in India, we can say bhed chal.
Okay, and so now coming back to the topic of this, so whenever you are using the work of others, and any company, I would say, I am not talking about simple, large or complex organization, in any small organization, let's say they have the actual valuation, liabilities of, you'd say, for gratuity and leave encashment. There you need a support of a expert, that what exactly he has done, because that amounts goes into the financial statement. And as chairman sir said, we put our signature on the dotted line of the financial statement. See, eventually we take the honors of those numbers. And that's where this, all the 4 auditing standards comes into the picture, that when you are using the work of others, correct, how exactly, or what is your role, or what is your responsibility, what are the things we should do and what are the things which we should not do. So moving ahead with this, so we have precisely 4 auditing standards today. One is joint audit, the second one is another auditor. Another auditor means if you are doing audit of the holding company and there are auditors of the subsidiary companies, that what kind of documentation or communication should go between both of you. If you are using the work of an expert, as I said, that expert means anybody who has contributed to determination of any amount in the financial statement, but eventually you are the responsible person. And finally, using the work of internal auditors. Over these 4 standards, we'll try to cover 3 parts. One is what are the practical challenges we should keep in mind? What are the regulators' expectation? Over last few years, Quality Review Board has come out with a lot of findings in their quality reviews covering all these 4 standards. NAFRA has done some file reviews, and NAFRA has also come out some of the few findings where improvements are required. And finally, what are the documentation which should be there in our file? As chairman was explaining, the nitty-gritty of an engagement letter, what should be there, what should not be there. Similarly, there are few documentation requirement today out of this 4 standard, which is must. And let me tell you one thing which I have imbibed in my profession as a practicing chartered accountant over last 17 years. I have been an auditor from last 17 years, and so I can vouch. Day one, my boss has told me, if not documented, it's not done. Anything which is there in your mind is good for you, but may not be good for the world. Especially as an auditor, when you have put the dotted line or signature on the dotted line. So obviously documentation is very, very important. Still, again, we will not keep it so complex, or will not go to the very complexity part, but we'll try to keep it basics. And I would encourage questions or anything wherever it come to mind. Before I move into the all the sessions, let me, I have a habit of checking the pulse of the audience. So with this, I come out with my first question polls, and it will come on your screen, and you just need to your appropriate answer. I must tell you that I can't see who has answered what. So obviously your CP hours will not go down with the quality of your answers, but at least it will let me know that if I can see 759 people right now on participants, how many are actually there? So the question is, let's say as an auditor, you are taking support of another CA firm for the verification of a stock account. Let's say you are based in Bombay and you have to get a stock verification done by somebody in Bangalore or Chennai, and he is your friend. So he supports you formally as a CA firm doing physical verification on your behalf. Now, out of this 4 standard, will it be a joint audit? Will it be using the work of another auditor? Will it be using a work of an expert? Will it be using a work of internal auditor, or it will be nothing? Mind you, unless and until I get 750 response, I won't move ahead. So 1 minute gone, and we have almost. I will still wait for 1 more minute, because if people wants to take some time to think over, they can think over it. So options are either he is your joint auditor, either he is acting as another auditor, either he is a auditor expert, management expert, or he is none of them. So it's already 1 minute 37 seconds. I will go up to 2 minutes 30 seconds for this poll. 20 seconds more to go. Ten seconds more. Five, four. Still, I'm getting answers. Things are moving. So I guess, can you see the responses? It says that out of almost 390 people who are participated, 40% believes it is another auditor, and next probable answer was 28% who believes he's an auditor expert. Few of them believes also he's a joint auditor, and few of them believes he's none of the above or management expert. The right answer is nothing, but he is an other auditor, because he cannot be an auditing expert. I will tell you why as we move ahead. He cannot be a joint auditor. That also I'll tell you why as we move ahead. And obviously he is not management expert for sake, and none of the above is a very simple guess, but not the correct guess. So with this, I am still happy. Two things that almost 40% people will write in their answers that yes, the basics are pretty clear by the quality, and I'm happy with the quality of audience we are having today, which will help us to be more interactive sessions. And let's see how does it. And similarly, I will keep on asking poll questions over the next 1.5 hours as we move ahead, so that by the time we end, at least I should get a clear, I would say, response and clear right answers as and when we move ahead. Great. So now with this, let me move on, start with the joint audit of the financial statement. What is a joint audit of the financial statement? Joint audit is nothing simple by the words, as simple as plain English it is. It is an audit of the financial statement wherein two or more CA firms or auditors appointed with the objective of the issuing the auditor's report. Both of them does the audit jointly. Simple as such, both of them are described as joint auditors. Like you might have seen in case of banks, it is very common that it is jointly done by two or more firms of the chartered accountants as they are appointed by RBI. Any guess that yes, is the joint audit mandatory? No, the joint audit is not mandatory, at least under the Companies Act. As of now, it is not mandatory. Yes, but we are hearing that there was a report in March 22 of the Company Law Committee, which says that, okay, joint auditor has to be mandatory for certain type of the firms, a certain class of the audit companies. And we are expecting that it to be regularized over the next few months. But as we speak, the joint audits is mandatory by RBI in case of NBFCs, non-banking financial companies whose assets base is more than 15,000 crore rupees. And in banks, obviously the appointment is done by Reserve Bank of India itself. So it is always a joint audit. But still, at the same time, as a part of the good governance, a lot of companies have the joint auditors appointed by them. A lot of large companies in India has the joint audit concept. And I'm very sure that few of you might be having this experience of the joint audit. So in next 15 to 20 minutes, we'll try to cover what are the nitty-gritties of the joint audit. What do we do, what do we don't do, and how do we document the joint audit piece. But from the concept perspective, this is pretty simple, that yes, that this is pretty simple, that yes, joint audit is nothing but when two or more auditors are appointed. I'm getting few questions in Q&A sessions. I would like to please reiterate that don't raise your questions in chat box. Raise your questions in your Q&A section, which is separately marked for Q&A, so that I can keep a track on it. So basically, the standard covers three things, as I rightly said. Number one, it is the uniformity, that yes, that to what extent the joint responsibility statements are being done. Then who or what are the joint responsibilities between the joint auditors? Are there shared responsibilities or are there individual responsibilities? And what are the areas of the work which can be allocated between the joint auditors? So the first question which comes into the mind when we do the joint audit, what do we do jointly and what do we do solely? And since this is not a practical or an in-person session, otherwise I would have loved to ask you one question, that what do we do first thing in the audit whenever we start the audit? The first thing which we normally do whenever we start the audit is the audit planning, in terms of like what are the key areas for the auditors, what will be the maturity level for the auditors, or what are the key accounts balances. Is sale is an account key, is an important area, trade receivable is an important area. In case of company having a goodwill in its balance sheet, is the impairment testing is an important area. What are the key estimates? So as a part of your joint audit organization or as a plan, first of all, the joint audit responsibility is to develop an audit plan. And just give me 1 second so that I can put some kind of text and select. Just a second. So as I said that, yes, the first thing is a development audit plan. That is the first and foremost thing. And normally the audit plan is nothing but determining the timing and nature of the responsibilities, the risk assessment. Risk assessment is nothing. What is the key risk in that audit? Is revenue a risk? Is goodwill impairment testing a risk? Or is the recoverability of the debtors or existence of inventories? Depending on the nature of the inventories or this, what is the risk in that area? The question is, as it is rightly written here, identify division of the audit area in the common area. So most of the time in case of joint audit, for example, let us say you are doing an audit of ABC company, correct? In doing the audit of ABC company, there are 3 divisions. So 2 divisions are in, let's say, Bombay, and 2 divisions are in Ahmedabad. And both the divisions are individually or are operating on its own. So can this be a segregated area between the 2 auditors? Yes, it can be a segregated area. That yes, Ahmedabad division will be done by auditor A, Bombay division will be done by auditor B. It can be possible that one is pertaining to chemical and one is pertaining to, let's say, any other industry. Let us say pharma and chemical, both are done by that auditor. So is this, can they assign based on the business unit? Yes, it can be done from chemical, and it can be done, chemical can be done by one entity, the another, the pharma can be done by another form of chartered accountants. So these are the very common ways of allocating the areas. But whenever you allocate and agree and decide on the allocations of the areas, mind you that each auditor has a fair say in the financial statement. When I mean fair say, that means the ratio of the distribution work should be more or less result into equal distribution. It is very, I would say it will be very unfair that one auditor works only on 50%, 20-25% of the work, and the another auditor only works on the 75% of work, unless and until the scale and the size of the CA firms are different. So always focus on fair allocation of work between the auditors. That will we help you to maintain mutual respect throughout the audit, not between themselves, but with the management as well. Then the second question, earlier we used to do that, okay, 5 years, the chemical division was done by auditor A, and then again we used to shift the 5 years, the chemical division to the auditor B. But now since rotation of auditor has already stepped into it, and rotation of auditor is actually changing the auditors within a term of 5 years. So this rotation of assigned responsibility is little bit irrelevant. Then the last question which comes into the mind, can the allocation of work be done on account based? Let us say there is only one unit, a very large unit, but a one unit only, there is no different division, one product, one unit, one entity. How will you do the joint audit? Then in a rarest of rare cases, standard allows that the joint audit can, the area segregation can be done based on the account balances. Like somebody will do sales and trade receivables, somebody will do cost of goods sold and inventory, somebody will do property, plant and equipment and depreciation. But account based segregation of the joint audit is very rare. And rotation of assigned responsibility is also going out with the passage of time. Moving on to the and how do we decide between the work between the joint auditors? The joint auditors is always decided by between themselves. There is no standard that what they should not allocate, but what should they. There are few areas out of my experience. I say let's say goodwill impairment testing, tax provisions, because tax provision is always at the entity level, and that is not at the division level. So therefore, these are the very common areas which are never divided and which is performed by both the auditors over the period of time. Three practical questions comes into the mind. One is the concurrence of the management. Yes, for any division of responsibility, once you decide which division, which business unit, which account will be done by each auditor, there has to be a mutually signed joint responsibility statement. Correct. And that joint responsibility statement will carve out what are the areas to be done by individual auditors and what are the common areas, and then joint responsibility statement has to be also signed by the management. Can both the auditor do the entire audit? Yes, in rarest of rare cases, both of them can decide, and if the management has that bandwidth and flexibility to explain every transaction to both the auditors, then can be done or not. And finally, allocation of fees. As I said in the beginning, the principle of the joint auditor is that area allocation should be fair, should be commensurate with the size, experience, and the stature of the CA firm. When I say equal, doesn't mean that yes, a firm with a 20 chartered accountants and firm with a 40 chartered accountants can ask for the same share of work. Based on the capacity of each firm, the resource, the strength, the knowledge, the industry knowledge which they have, then they can determine that yes, area allocation has to be done. But it has to be fair, and so is the allocation of the fees. So please keep in mind that you need to engage into the joint responsibility statement as and when. As I rightly said, work allocation document should be signed by all the auditors and should be communicated to those charged with governance. This is also important part, that whatever area allocation you do, that should be gone to the audit committee and board of directors. That yes, when they have appointed the joint auditors, these are the areas which each auditor will perform. Now the question comes into your mind, why do I need to inform the management? Because two things. One is the management should be aware to whom they have to respond with each area. That is the most important part, that why management information and concurrence is required for allocation of work between the joint auditors. And the second part is that in case of any dispute, there is always a party who is available to settle the disputes, which obviously a signature and signed document by the management, which will help all of us to maintain the joint auditor decorum. Now, as I rightly said, that theoretically individual responsibility of the joint auditor, if you have a document in your file which says that yes, area division A, B, C has to be done by me, D, E, F has to be done by another firm of chartered accountants, then anything which can go wrong, regulators will make you responsible for your areas of responsibilities, and for the other areas, the other CA firms will be responsible. But yes, please keep in mind, at the same time, you cannot just blindly keep your eyes shut on the overall financial statement. There are few things which as a joint auditor you cannot escape or you cannot leave, like disclosures in the financial statement, compliance of the financial statement in accordance with the Companies Act and the other provisions. Those things are the joint responsibility of the auditors, and nobody can escape it saying that this was not in my scope. So there are few things in the standard which is jointly and severely responsible as the joint auditors, but the maximum, the major part is the examples of the common areas is this. What do we do? Or like taxation is a common area, goodwill impairment testing is a common area. There are few any other common areas. But the larger question which comes in mind, that if everyone is responsible for their own areas, then why do we need a joint audit? For two things. I would say, with the joint audit concept being accepted or being prevalent, number one, that yes, a firm can demonstrate his or expertise on their own critical areas. Like say, you are a firm who you expertise in an audit of the chemical business, but you get a client which has a chemical business as well and pharma business as well. Now they ask you for bidding as an auditor. So obviously you just know your knowledge back is of the chemical. Then you can accompany, or you with any of your colleagues or peers who has an experience in the pharmaceutical, both of you can work and jointly bid that yes, we will bring each of our expertise in making the best out of your audit of your enterprisation. And that's why the joint audit concept is being brought into picture, that wherever there are multi-dimensional businesses, wherever there are businesses which are spread into multi-locations, a collaborated firm of chartered accountants can really bring into the best practices and do the joint audit. And that's why the concept of joint audit is bring into picture, and it has been tested in few cases, which has been found acceptable. But at the same time, the every audit, everything has its own pros and cons. The cause here is that management might need little more extra effort because they need to deal with two sets of auditors. Sometimes cost is also a concern. Yes, because few common areas, like I said, like impairment testing of the goodwill. Now the management has to make sure that yes, they need to satisfy both the auditors. Now, next question comes, which comes into the mind is that, yes, what if there is a conflict of views? I and my fellow chartered accountant, we both started doing joint audit. We came to a point where we have a difference of opinion for one particular area or one particular conclusion. The basic premise is that both the joint auditor has to issue a common audit report. And that is why if you have seen the audit report of a joint auditors of any listed company which are available on their website or their BSc databases, they are not on the letterhead of any one particular CA firm. They are on a blank white paper because it is jointly signed by firm of chartered accountants, more than one. Rare to rarest, if there is a disagreement between two firms, then two reports will be issued and in that case, both of them will make reference to the report of another joint auditor saying that yes, because of we have a difference of opinion, my fellow joint auditor has issued another report so and so date, which is also and so number, and this has to be reported in the other joint matter paragraph. So it's good to know that where do you go in case of any conflicts, but I haven't seen this kind of instances in my life. Those instances might exist, but generally we chartered accountants are pretty smart and pretty convincing that we convince each other at a point of time. Why to make a case for the management unless and until it's extremely necessary and you are strong or confident of your own opinion that yes, this is what I think is right and I am not able to accept or agree to a different opinion. So with this aspect of the joint audit, if you have any questions of the joint audit, I would just wait for 30 seconds here. I've got a couple of questions on the joint audit on these things. Are we required to report in the auditors as auditor? I think this was more pertaining to our questions on inventory physical verification. And there is a question from Mr. Karthik where we can get the formats of engagement letter, management representation letter, etc. Karthik, the formats of the management letter and the engagement letter are very well available on the ICA database on respective standards set by them. There is a separate standard for management representation letter. There is a separate standard for engagement letter, and we can use each of them for the purpose of joint audit. The only difference is that there has to be a common concurrence between, because sometimes the wordings are a little bit different or optional for CA firms or the auditors or the management to keep on change. So whatever options you exercise for disclosure or drafting of the engagement letter, management letter, you need to have common consensus with your joint auditors. So with this, I think I have answered both the two questions. And any other questions you guys can please, there are few rare hands raised. Any question by anyone or just out of mistake? Okay, I think I'm getting a few more questions. In case of qualification by one of the auditor, very good question from Mr. Chandrakant that yes, if there is a qualification by one auditor, see, if I go little back to your answer, if there is a qualification by one of the auditors, so that will be coming out of the area which he is assigned. And therefore, in those cases, if there is a qualification, then yes, both the auditor has to agree. Like, as I told you that if I am a joint auditor of a chemical and a pharma division, and I am the one of the joint auditor doing chemical, and then my fellow CA firm is doing a joint audit of pharma, and he has some qualification with respect to property, plant and equipment, I have to accept it. Obviously, there will be deliberations and discussions between the joint auditors, which I will come to the next slide. But that qualification will become a common qualification by both of us in the audit report, and we both will be responsible for the auditor's report or for the areas which we have reported in the auditor's report. So as simple as that, if there is a qualification by one auditor, it comes in the auditor's report of both the joint auditors. Any other questions? And I can see few hands still raised. Guys, if you have any questions, it will be more than happy if you can put it in your Q&A box, and I can able to understand or answer it. Fine. Lastly, the moment if I and the one thing which I want to make sure that out of this this sessions is that whenever obviously you will read the auditing standard 299 revised, but what is more important, what is not covered in that standard, which we really need to make out, is that number one is the practical challenges. Can work papers of one joint auditor be accessed by another auditor? No, that's not allowed under the auditing standards. You have to respect the confidentiality of the another auditor, whatever he is. Yes, if you have any doubt, you can ask, and he is as liberty to share with you. Suppose you are doing an audit of the consolidated financial statement as a joint auditor, and few of the entities are audited by only one entity. Then, because joint audit report means that entire financial statement is audited by you. So if something is audited by only one entity, it needs to be carved out separately in the auditor's report that this one particular entity is being audited by one of the joint auditor, not the both of the joint auditors. Communication protocols, very, very important. That communication protocols, very, very important between the joint auditors. And I must tell that whenever you are discussing with your joint auditors, have something in your paper that when did you discuss, what did you discuss, so on and so forth. And finally, consensus among the auditors in the complex areas involving judgment. This is very, very important coming because as an audit firm, that itself is becoming a complex thing to take judgments. And then you have joint auditor, you have to make sure that both of you are aligned. In your file, one is a joint responsibility statement, common engagement letters, common management representation letter. When I say common engagement letter, like Chairman sir was explaining to us, what are the nitty-gritty of the engagement letter, date, place of arbitration, fees, scope, what is there in the responsibility, what is not there in the responsibility. So all of this has to be agreed between both the auditors and with the client. And lastly, this is pretty important nowadays. Whenever QRB is reporting your files, they are saying that there are a lot of discussions which CA firm says that we have discussed with the joint auditors, but we could not find any discussions in the file. And therefore, it is must to have the minutes of the meeting with the joint auditors, with management, and with those charged with governance, which may be AC, audit committee. I have one more question. PSUs are audited by statutory auditors and CAG separately. Going on multiple audit firms will become a norm for listed entity. Does this sort of double audits get covered? No. If an entity is being audited by PSUs as a stat auditors and by CAG as a different audit, then these audits are completely executed under two different sections or two different provisions of the Companies Act. One is done as an appointed by the shareholder as a stat auditor. The other one is done as by the CAG auditor, and therefore those are not, as of now, not covered by the joint auditing standards. But I would request, and I really am, I appreciate a question that this is where I need the participants to think that yes, the standards were somewhere revised before 10 to 15 years. At that time, these were not the norms. Now, as you rightly said, that multiple audits is a norm for every, multiple audit is a norm for every company in India. So do we need a standard in this? Yes, we really need a standard in this, and therefore, technically speaking, today, this kind of double audits are not covered in the joint audit, but somewhere this has to be covered in future as well. With this, let me move on to my another topic. And if you have any questions, you can, using the work of another auditor. Very, very simple. I think those who are please raising the hand, instead of raising the hand, please write your questions in chat box, and you can directly send the questions to me. I will try to answer those once I get this thing. Okay. Just a second, my dear friend. There is some. So when this, what is the work of other auditor? Suppose you are an auditor of the consolidated financial statement of a group, and there are one or more subsidiaries or one or more associates, for which you are not the auditor. Generally, the auditor of the holding company and the subsidiary company are the same. Whenever the auditor of the holding company and subsidiary are not the same, because you are opining on the consolidated financial statement of the group, that means there are few entities in the group which you have not audited, which is audited by another auditor, and on whose work you rely, because you are not going to check the financial statement of each and every subsidiary, and therefore you are going to rely on the work of another auditor, and that's where the standard brings. It not only applies to the CFS, but it applies to the branch and division. Suppose you are doing audit of a standalone financial statements, and there are few branches which are done by another firm of chartered accountants, which is very common in case of branch audit. So you can say that yes, you have relied on the work of the another auditor, which are called branch auditor. Mind you, this is not the joint audit, because in joint audit, both the auditors take the onus of signing the same set of financial statement. Here, both the auditors are signing on different set of financial statement, which may be of a whole head office and a branch, or one holding company and another subsidiary company. So please don't mix with the joint audit and the principal auditors and the component auditors. And secondly, generally it applies when the branch or division which is being audited by another firm of chartered accountants is material. So I think we have, most of the time we have seen in our in the reports of the consolidated financial statement, that financial statement of 3 subsidiaries, 5 subsidiaries whose total assets contributes this much of rupees, revenue is X and cash flow is Y, are not audited by me because of this standard. They are being audited by another firm of chartered accountants, and auditors generally carve out them in the report. But the question is it enough to just take that set of the financial statement and auditor's report and carve out and leave it on the table? No, that's not enough. We are not a postman. We are a professionals, so we have to apply our mind, at least not at the ground level or micro level of the components, but at least at the macro level. So as I rightly said that this applies in case of holding company and the branch and division. How does this standard benefits? This standard benefits that if you are doing audit of a holding company and there are 5 subsidiaries and you have to report on the financial statement of the entire group, this standards allows you as a firm of chartered accountants to rely on the work of other auditors. So that's where most important standard for all of us, that how do we leverage the work of another auditor who is not even appointed by you, who is appointed by the shareholders of the subsidiary company. But yes, you can leverage or consider their auditor's report while reporting on the consolidated financial statement. As I rightly said, what is component? The component is nothing but a division, subsidiary, or a joint venture. Another auditor means a person or a firm of chartered accountant, individual or partnership firm who is auditing the work of that particular component. Most important part, when you should agree as an auditor of a holding company, when number one, let's say a group where holding company contributes only 10% of total revenue and subsidiary is making significant amount of the revenue. So will you accept as an auditor of the principal auditor to do the holding company and sign a financial statement wherein 90% is not audited by you? I believe that's not the right decision to make, even though the auditing standard doesn't restrict you anywhere in terms of quantification that how much should be done by you and how much should be done by another firm of chartered accountant. But it says that you should act as a principal auditor of the holding company only if and only if you are doing material of the financial statements. That means you are doing substantial part of it, which may be 50% of the revenue or which may be 50% of the assets. Secondly, most important, when you want to work as an auditor of the holding company, you should have the knowledge of that particular business of that holding company. Third is that what is the risk of going wrong, material misstatement? That is the third part. And fourth and foremost part is the principal auditor, is the whether the other components are being, how critical those are. Now let us take a practical example. A Limited and audited by ABC. ABC is a firm of a chartered accountant. It has also a subsidiary B Limited, which is also audited by same team or ABC with same firm but a different team. Now C and C Limited, then there are two C and D Limited. This is a typo error. C and D Limited is not audited by ABC Limited by some another firm of chartered accountants. So what do we do? In this case, the standard says that there has to be a normal set of instructions. Formal instructions should go from the principal auditor, means from the ABC to non-ABC firm, that yes, you are my component auditor. You are doing the audit of the subsidiary financial statement. I, as an auditor of a holding company, is going to rely on your work as an auditor of the subsidiary financial statement. And for this, you need to do A, B, C, D, E things. And most important part for all of us, recently, I mean, before 2 years, two and 3 years, in 2019, SEBI came out with a circular for listed entities that all the auditors of the listed companies should send out questionnaire, instructions, whatever word you call, to the component auditors, to the auditors of the subsidiary company, who have to make sure that yes, few things are taken care of. What are those things, which we will take care in the next slide. Before I move on to this part, correct, let me explain you few nitty-gritties that what is the before the holding companies goes and connects with the subsidiary company. He has a power. I would say, first of all, he has a power to entitled to rely on the work of another auditor. That is very much there. He need to ensure that the personnel has enough professional competency, especially he is not a member of ICAI. You might be wondering, how can a person who is not a member of ICAI can be another auditor? It can be because if the auditor, if that entity is outside India, then the chartered accountant firms of that country can do the audit of that entity, which obviously are not the members of ICAI. Most important, principal auditor should make sure he should be aware that his work is being used as for the purpose of reporting in the financial statement. And lastly, Companies Act also gives the power under the Companies Act that auditor of the holding company can access the records of the subsidiary and the associate companies. Irrespective you are an auditor of the subsidiary or not, you have full power to work on the to use the financial statement of the subsidiary or the holding company. What are the procedures that they need to use? They need to give the group audit instructions, which mainly covers the timetable, when they will complete the audit, what are the risk areas, and what are the materiality limits for those audited financial statements. And also, once the response is received, principal auditor can discuss or review summary of the procedure. So whatever procedure they have done by the component auditor, principal auditor need to discuss with the component auditor. So generally, we say that we use the word component auditor, means a auditor of a component in the group financial statement. And as SEBI said that earlier, as SEBI has mandated in their particular circular, which is very right as well, that all the procedures to be documented and how the just a second. There's a share windows. Let me, I think there is some technical problem. Give me 1 minute. Is my screen visible?
Slide stop करिए sir.
That's what I'm trying to do. Just a second. Is this visible now?
Yes sir. Yes sir.
Okay, great. So what I was saying that yes, as per SEBI regulation, principal auditor is entitled to instruct the component auditor to acknowledge the receipt of the instructions, number 1 part, and on the completion of the audit, he has to confirm that whatever instructions which were given by the firm of the holding company is completely being taken care of. The next part is that as a principal auditor, they need to understand and ensure that yes, what is the consolidation procedure? What are the components which goes into the financial statement? What is the materiality of the consolidated financial statement, and how much materiality they need to assign? Please understand that I'm not sure how many of you are aware that how do we assign the materiality limit. Let's say if I am an auditor of a holding company and the turnover of the holding company is 1,000 crore rupees, and I have a materiality limit of, let's say, 20 rupees, that anything beyond 20 rupees will be reported to the audit committee or will be reported in error. Then what extent the percentages of the subsidiaries is be component, so I assign a materiality to the component as well. But all these procedures are a very detailed and formal procedures when you do assigning of the instructions to the component auditor. But what is more important, whenever you are doing the audit of components or of the holding company, please make sure that you communicate in writing to the component auditor that their reports, number one, are being used by them as an auditor of the holding company for the purpose of issuing opinion on the consolidated financial statement. Number two, whatever risk you believe as a group, you have discussed those risks with them. You have told them these are the risky areas. Please, I need your comments from the subsidiary point of view. What are the risks in those areas? The third part, have you done your audit in line with the auditing standard as required? Number that third confirmation is required. And finally, if he or she has any finding in the financial statement, then whether those findings are appropriately dealt with. So these are the 3 or 4 important things whenever you do a report or whenever you use the work of another auditor. PA concludes the work of another, and if by any reason, PA means principal auditor, by any reason principal auditors believe that the work cannot be used because that auditor has issue of competence or timely issue of not, then he is full liberty to qualify the main report on the consolidated financial statement. Lastly, and the last but not the least in this entire cases, is that the division of the responsibility, principal auditor's responsibility is he will not be responsible for the work which is done by another firm of chartered accountants, except where he should have applied his professional skepticism, his suspicious whether there is any fraud or not. For example, if there is a huge goodwill which is sitting into the financial statement of the subsidiaries, and that goodwill impairment testing has been done by the management of the subsidiary company, and obviously it has been tested by the auditor of the component of that particular subsidiary. Since the amount of the goodwill is large and it involves a lot of judgment, so you as a principal auditor has to ensure that whatever work has been done is appropriately done or not. So just there is no clearly right or wrong answer when somebody asks me that whether by carving out your responsibility that yes, these 5 subsidiaries are not audited by me, does it completely pass on to the another auditor? Yes, it does pass on to the another auditors, but you also need to ensure keeps an eyes and ear open that whether the transactions which are coming into the financial statement of the subsidiary company, or which involves a lot of judgment, a lot of estimates, a lot of significance, whether those are being appropriately dealt with or not. And as it is rightly said, the auditor audited certain components in his report and they need to report. So before I move into the practical challenges, which is the last slide of this another auditor, let me take, there are 3 or 4 questions and some raised hands. Is branch auditor need to communicate with the previous auditor? I think this is more with respect to some professional, we have our norms work by ICAI that whether whenever you are appointed as a branch auditor by RBI, correct? So it all depends. I have got this answer at anonymous, but it depends on who has appointed them. If it is a regulatory appointment or if it is a non-regulatory appointment. If a company appoints a new branch auditor, then they have to certainly go and check back with the previous auditor whether they are appropriate with this appointment or not. But I think this question precisely doesn't cover under relevant essay. I can see one hand raised by somebody. That's it. If you have any question, please raise your hand, or please, have any questions, please put your question in the chat box. I can see few raised hands, but I'm not sure whether participant can speak or not. Webo, can participant speak?
No, participant can't speak.
Sir,
Okay.
question only chat कर सकते हैं sir.
Only chat kar sakte hain. So yes,
Yes.
then I would please request all of you to raise your questions in the chat box or in the Q&A sessions. Precisely in the chat box, then it will be more easier for all of us.
Yeah, only panelist and host can speak and open their video.
No
Actually.
problem. Should branch auditor always be appointed in the AGM and rectify year on year? So now moving back to the work on the another auditor, as again, I am saying you out of this 4 standard which we are taking: joint audit, internal audit, work of another auditor, and the management expert. SS 600 is an area which is very, very commonly used in today's world. Every small group has multiple entities. Holding company and subsidiary company structure is very, very common, which was not so before 1 or 2 decades. And therefore, the auditor of the holding company has to rely on the work of the subsidiary, on the auditor of the subsidiary company, unless and until he himself or herself is an auditor of the subsidiary company. In those cases, which is common because the groups are expanding, subsidiary companies are existing not only in the same area, but they are across geographies, they are being existent. And therefore, whenever subsidiaries is being audited by another firm of chartered accountant, it is equally important that how do you communicate with those auditors, because you cannot just take their report and put into your report that these subsidiaries are being audited by another firm of chartered accountants and they are not my baby. That's not the case. You can carve out in your auditor's report, but at the same time, as a principal auditor or an auditor of the holding company, it is your moral responsibility to do some basic works around this. And those basic works is: number 1, make sure that you give them the timely instructions. Make sure you make them aware of the materiality limits or the key risk areas which you believe as a group, which may be related party transactions, goodwill impairment testing. Keep on communicating with them over the period that whether are there any preliminary issues which are coming whenever you're doing the audit. Will you be able to report me before 4 or 5 days of the financial statement when I need to sign? So if there is any qualification in the auditors or the if there is any qualification in the auditor's report of the subsidiary company, then the principal auditor has to discuss with the management of the subsidiary company and may go back to the auditor of the subsidiary company how to deal with those qualifications, how those qualifications will be disposed of. Then there is one more bullet: financial statement prepared and audited in the different gap. Suppose the subsidiary is located outside India and outside they follow their own local gap, which can be UK gap or US gap, which is not your Ind AS. Then what do we do? Who will take the onus of the conversion adjustment? Do they have time? Will it be done by the subsidiary auditor or will it be done by you? Then if there are unaudited financial statement, this is one of the another important area where I need to speak about a little bit more. If you have few subsidiaries which are audited, not at all audited, obviously those has to be very, very immaterial. But then the standard very clearly says in those cases, you should have discussed with the management about the nature of the operations. What is your understanding of their business? How did you take the comfort on the unaudited financial statement? It just cannot happen that you just take their financial statement and put it into the file and write in your auditor's report that these financial statements are completely audited by or are not audited by anyone, and hence I don't know. That's not the case. It is your primary responsibility to keep your eyes and ears open on anything which you receive from management as an audited financial statement or from management as a subsidiary's audited financial statement by another form of chartered accountants. In terms of documentation, instructions shared to the component auditors, their responses, minutes of meeting with the component auditors. This is a very common ask in every review. Whenever you are discussing anything with the management, critical discussions, you should have minutes of meeting in the file. disposals of modifications in the auditor's report, key issues identified by them, and if you have identified any risk, key issues, how the same are being taken care by the auditor firm of or the component auditor. So there are questions on the appointment formalities of the branch auditor by one or two participants. I would say that as far as the appointment formalities are considered, somebody has to really follow what is there written in the Companies Act. I don't think there are any carve out or any exemptions given by any auditing standards not to do or to do something. What is more important, you have to make sure that your appointment is very well valid. And number two, it is very well communicated to the stakeholders, may it be companies, ROC, by filing ADT 1, so on and so forth. So any questions on the work of another auditor, or I move on to the third auditing standards on the which is using the work of an expert? Before that, I would like to take a pause here. It's almost 1 hour I've been speaking. At least Pinky ma'am, is it going slow, fast, or if you have any suggestion, please let me know so that
Yes, sure, sir, sure. It is going very good.
The good part of this kind of presentation is that good for participants that they can enjoy, but very difficult for panelists that you are looking on a screen and you are just going on speaking.
Actually, that I know it's become monotonous and boring. कि आप खुद को ही mirror में देख के बोल रहे हो like.
But at least I'm getting few questions, so I can see that yes, people are there and people are asking questions. And let me do 1 or 2 poll questions just to make again sure that I can see almost 800 participants are there. By the number of response, I will come to know how many are there active.
Correct.
Right or wrong?
Correct, sir.
So the question is, a CA firm was K was appointed the statutory auditor of KLM Limited, Mumbai, has a branch auditor at Delhi. The branch auditor CAS was appointed to conduct the audit of the branch auditor. K was not satisfied with the CAS and wished to obtain the working paper of the CS. If he has to obtain sufficient appropriate, can he access the file or not? I'll go for 1 more minute. I'm getting good number of responses.
Sir, as host and panelist cannot vote, I have posted my answer in chat box.
Great. So I will close the poll in next 10 to 15 seconds. I've got almost 10 seconds more. Okay, fine, no problem. Okay, so again, the question was whether the person can ask the access to the work of another auditors. No, he cannot ask the access to the work. They don't have a right. Yes, in limited circumstances, they can ask for a particular area that I want to see how the goodwill impairment testing was done or how the physical verification of inventory is done. Correct. And secondly, the second option is also right, that as per a standard on auditing 600, an auditor can rely on the work of the another auditor without accessing the work paper. We as an auditor of the principal or principal auditors, we are not supposed or we are not obliged to go and check the work papers of another firm of chartered accountants. We are fully empowered to rely on their work, and therefore the right answer is both A and B, which almost 36% people have said, and I'm pretty impressed that all 29 and 15% of those who have given A and B are also right. So substantial people have given partially right or full right answer. So the crux of this entire auditing standard is that to what extent you can rely on the work of another auditor. When do you share the instructions? Most important part is that since you are a group auditor, you are responsible for ensuring anything which goes wrong in the group, you should be aware, and therefore you have full liberty to go and instruct the another firm of chartered accountants. And mind you, SEBI in Companies Act, in their LODR regulations have mandated or have given the powers to the principal auditors that they can go and tell the subsidiary auditor what to do and what not to do, correct, or what extra needs to be done. So don't feel a little bit, I would say, use these powers. Otherwise, the moment you are signing a CFS without consulting with the state auditors of the subsidiary company, you are taking one more set of risk, which is very dangerous in today's world of changing environment. So with this, let me move on to my third, and this is my favorite subject personally, if you ask me. The first one is the joint audit is a favorite of regulators. The second one, using the work of another auditor, is a favorite one of the economy because every company has a subsidiary or a holding company. The third one is using the work of an expert, auditor's expert. Now, what is an expert? First of all, okay. So see, whenever we are saying the work of an auditor's responsibility, he can rely on the work of an individual or an organization as an expert. Now, who are those experts? First and foremost part, an expert is in any field who has the technical knowledge and subject expertise, but other than in accounting and auditing. If you are consulting anybody formally for any accounting opinion or auditing work, or if you are involving anybody for an accounting or auditing work, that's not an expert under 620. Why? Because it is already covered in the work of another auditor as 6 on the standard which we take 600, because you are taking him for the purpose of accounting or auditing. So therefore, any other reliance done by another firm or any other expert, there can be plethora of expert in today's world. And there can be two type of expert. One is the management uses his work, like as I rightly said, as I said in the beginning, the work of actuarial valuations which are done by actuaries they are an expert. They are they are persons who can come out with a scientific method and determining what can be the potential gratuity or leave liability in the book. So therefore, management uses their work as an expert. At the same time, auditors sometimes, which is marked in the red box, auditors also sometimes uses the work of an expert to SAAE, means sufficient appropriate audit evidence. Excuse me for the brevity, but somebody who has designed this slide has made the best use of the short forms to the extent possible. So auditors also can sometimes use the work of an expert. He can appoint any firm, any legal firm to take an opinion which he is also not confused. Before I go to the on the definition, I would like to apprise the audience is that with this growing economic scenario where financial statements are not only limited to transactions being recorded, simple, but there are a lot of estimates come at the period end, like impairment testing, determination of value in use, actuaries. So what are the real experts? So if I were to decide the, if I were to decide the experts in this forms, normally direct and indirect tax people, if the management has taken any legal opinion for a tax treatment, then the person who has provided that opinion becomes an expert. Valuation expert, when you do the in-days transitions, you are supposed to get the fair value of the fixed assets done. Derivative accounting is a very common in today's world. Taking forward contracts, mark-to-market valuation by the banks is also an expert. Purchase price allocation and business combination, physical inventories, IT system expert or legal expert. All these are nothing but the expert. Now the question comes, physical verification of inventory like estimates call, how it can be an expert? It's an auditing work. Somebody is doing physical verification. No, in case of physical verification of coal, you are appointing an expert who, because coal you cannot count or measure, or you cannot weigh. There is a scientific formula. They will measure the heap, they will measure the depth, and they'll come out that okay, approximately this looks to be 300 metric ton of the coal, and therefore this is a work of an expert. Why did I jump this slide? Just to explain you that there are few areas where there is a very thin line between the difference. What is an expert and what is not an expert? For example, expert, if you're taking if the management or you're taking an opinion from a tax person, it is an expert. But if you are using somebody's expertise to do this opinion in accounting in deferred tax, that is not an expert. For example, valuation of derivative is an expert job, but accounting for derivatives in the financial statement, whether it should go to P&L or it should go to the cash flow hedge reserves, that is not a work of an expert. So obviously, wherever somebody is applying knowledge which is not accounting or auditing is nothing but the work of an expert. For a knowledge and curiosity, globally nowadays, as per a statistical report, 30% of a time spent by auditor in an audit goes to the time taken by audit by an expert. Imagine 30%. Here we are still not using the expert to a great extent because the systems have not developed. Like for example, the biggest expert which we rely is on a IT expert, because whether the IT systems are sufficient enough to make sure that the data is fully protected, whether the entries are made by the right persons or not, whether the approvals are done by the correct persons or not. So whenever you are doing an audit of large organization, you will involve IT expert as well. But other than that also, you will need tax people, you will need legal expert, you will need valuation experts. Even though you might not appoint as an auditor on your own, but those will be appointed by the management and you have to rely on them. So it's not that it's your choice, you don't appoint an auditor as expert. It is your obligation, it is your responsibility to rely on the work of the management expert, because management will anyway going to appoint them. So there are two kinds of expert, as you can see on the screen. One is auditor's expert, three things. In case of auditor's expert, he goes and reports back to the auditors, whereas in case of management expert, he reports to the entity. Obviously the auditor's expert is helping him to obtain sufficient appropriate audit evidence to report on the financial statement, whereas management expert is enabling him to report on prepare the financial statement. And sometimes management expert can be an in-house expert as well. Let's say, for example, doing a warranty calculation, a scientific method is being developed and a scientist of a company are making those valuations. Like in case of LIC of India, there liability of the corpus is being valued by their own internal scientist. It might not done by independent firm of actuaries anywhere in the world. So therefore, these are completely employed by the audit by the management. But wherein in case of management can hire an expert for any things which we discussed. Similarly, auditor can also an intern expert. You need tax people, or you need any let's say a fair valuation of derivative. In every client of yours, derivatives are there. Then you may hire a person who has a knowledge of derivative fair valuation. Then it can be your internal hire, or you can take them on an assignment to assignment basis. Both of them can work. This I think we discussed. And so most important part is, when do we need an expert? The expert is required mostly in most of the cases. If I see, mostly management experts are being used by the auditors as well. Whenever you are doing the work of the management expert, means if the management has appointed somebody to do the fair valuation of assets, then how do you rely on them? Because he is being paid by the management, he is being employed by the management. Then how will you ensure the independence? How will you ensure that whatever output he has given is being sufficient enough for you to rely on? You cannot just say that this was done by the management expert and so I relied on them. You have to do your checks and balances and make sure that the numbers which are being derived by the management expert are reliable on it. And how do you do that? 2 to 3 things which you need to do. Number 1, whether that person has a competence, capability, and objectivity. First and foremost part. Whether the person has a competence, capability, and objective. Competence means whether the person who is doing this kind of work is competent enough or not to do that particular work. Then understand what was the scope which was given to him, whether any formal scope given or not. And lastly, and the most important part, whether the work which is done is appropriate or not, whether whatever information he has been received is reliable or not. We will see in further slides, but what are the kind of informations which he sees? What is the significance? Is it material or is it not material? So on and so forth. So these are the main things which you should keep in mind while you are relying on the work of an expert. How do you check his competence? Competence is nothing but, is there any possibility of any biasness in his work? Correct. I am very sure that it's very difficult to establish the independence of a particular person, because he is being employed by a set of organization. But whether he is doing his work without any biasness, or whether are there any other conflict of interest or not, or how the fees arrangement is, the fees are being arranged on a what you call it, outcome basis, that if you give me this much of valuation of PP, I will pay you this much. If you are able to not give me this much of valuation, I will not pay you this much of value. Is it a fixed fee assignment between them, or is it a variable fee assignment? So all of this will help you to understand whether the work which is done by the management auditor is sufficiently reliable or not. And again, few other steps which is written in the standard as clearly stated. What is your personal experience with the previous things? Have you done discussions? Do you know their market competence? What is his qualifications? Membership of the institute on which it is being appointed. Like in case of actuary, sometimes we go and see whether he is an authenticated member of the Actuary Institute of India or not. And what are the firm's quality controls? So the more you have all these things documented in your file, it is very easy to establish for all of you that yes, you did your checks and balances on the competency of the firm before completely relying on his work. Then the second part, once you have established the competency and the reliability of that person, what are the next things you do then, which is more important to me when you are relying on the work of expert audit? How many of you have ever dealt with valuation of PPE? So it is a very common area. While whenever of your clients are doing in-days transitions, or they are doing fair valuation of the fixed assets, it's very common. So what we will exactly see, whether the method which is being used by them is appropriate or not, whether the assumptions which are being used by them is appropriate or not. What is the source data? Let's say suppose somebody is doing impairment testing of a plant or impairment testing of a company. What will be the source data? Future projections, because you need to determine the value in use. So future projections, how will you determine future projection? You need to have some basic data. What is the today's operations? What is the growth rate you have tried and considered? What are the discount rate you are going to discount there? And are there any other assumptions or not? So these are the two critical things, whether the method which is being done to determine a particular amount, what are the assumptions which is being considered, and what is the validity of the source data which goes into this picture. So remember this slide. I would request to please keep all of you this slide particularly handy. One is the method and the models. Second one is the assumptions. So whether the methods are in line with the industry standard or not. Assumptions, whether it is in line with industry standard. Suppose the industry is assuming a growth rate of 8% per annum, and this gentleman of this company has taken a growth rate of 15% per annum. Then how this is aligned? If the management is planning to do the capacity expansion, do they have a sufficient cash flow or not to feed into the capacity expansion? What is the sensitivity analysis? If you have seen a lot of actual valuation report nowadays, which is very commonly used in any financial statement, they do the sensitivity analysis whether that if the discount rate will increase by 1% or plus minus 1%, how the valuation will change. Another important factor is the data source, which is external and internal, approved by the competent authority. That means the projections which are being used, whether they are approved by just a finance head, or they are approved by the board of directors, or they are approved by the CFO. The more higher it is approved, the more reliable it is. And finally, and the most important part, which is this one, management's process and controls implemented by the management. So what are the process and the controls implemented by the management? Whether all these assumptions are being reviewed by somebody in the firm or not, that is point number one. Are somebody validating those assumptions or not? The more independently they are being validated, the more reliable they are.
Sir, one question is in Q&A. Will the forensic team used by management to find the fraud is also considered as management expert?
Yes, it is.
So it will count expert only, no?
Yeah, it will be count very much as an forensic expert, is an expert only. So that's a very valid, I think this is one of the best example in today's world which is being used. Forensic experts are very commonly used in areas where there are allegations of misappropriation of assets. And therefore, I think what kind of arrangement which is then being done by those people between the company, are those reliable or not? Then only you can consider the reports of those forensic experts as a part of your audit outcome. And then, and finally, at times what happens that this was all, see what I was discussing, this is all about an expert. It can be a management expert and it can be an auditing expert. But most important part, sometimes auditor himself also appoint an expert. Correct. Let me take this theoretical extensive example, like management has appointed a forensic expert to determine a fraud. Now the negligence or the severity of the fraud is so high that you as a firm of chartered accountant also need an independent opinion from somebody that whether this fraud is extensive to this extent or not. So you also appoint another firm for doing forensic audit, those who are expert in forensic. So what will you do? You should have an engagement letter with them. You should have agreement with them that your job is to not to find out fraud and report back to me, and not to go to the public. What is your responsibility and what is my responsibility? That has to be clearly carved out whenever you are appointing an expert by the auditor. So who will take the onus of the assumptions? Correct. Who will take the onus of the verification of the source data? I have seen a lot of NAFRA reports and QRB reports which says that while using the work of an expert is fine, but the responsibility which was assigned back to the audit team and the responsibility which was assigned back to the expert was not fully there on the file, that how did each of them made those responsibilities. So please make sure that you have very clearly written in your files what is your role and what is their role and what is your role. That should be very well discharged and documented in your files. And finally, if you are not satisfied with the work of the internal auditors, of work of the auditors expert, or the outcomes are not in the favor, or they are completely what it is with management experts outcome, and you are not able to reach to a common conclusive point, then you have to qualify the report. That's the only choice available. So these are more with respect to some nitty-gritties that yes, if you have an agreement, what you should write in the agreement. But I think without giving much detail in the agreement part, I'm more discussing on the concepts, that how do we deal with those concepts whenever we are doing this kind of work. So one is, just to summarize this particular standard, first of all, whether an expert is required or not, first and foremost thing. Secondly, if the management has appointed an expert, as we discussed, that is a forensic expert appointed by the management, is fine or not. Timely involvement of the auditor's expert in the field of the audit is most important. That if you want to get, now if you take this example of the forensic expert, then if the management is appointed in forensic audit, then obviously you are also willing to do, you have to do the same time. Because by the time if management's work is done and then you say no, I want to appoint my auditor, then my expert, then again it will delay the entire process. Appropriateness of the data source, alignment with the management internal information, reasonableness of the assumptions, including the past performance and the sensitivity analysis, is very, very important. How reasonable those assumptions are, what is the past trend, whether they are aligned to the industry trends or not. And as I rightly said again and again, segregation of responsibility between the auditors and the expert. In terms of documentation, what work you have done on assumptions, how did you verify the competence of the expert? Like in case of actual valuation, generally we put into our file, we visit their website and we see, yes, all of them are pretty competent enough form of actuaries whom we can rely on, because they are publicly available, acclaimed, knowledgeable people. Discuss with the management and those charged with the governance that you are going to use this expert. Discussion between the auditors and experts. So all those things are there housed in a file. And yes, sometimes it may found it painful that how much documentation we need to do, or to what extent we need to do. But the crux of the regulators or the expectations of the regulators, may it be SEBI, may it be ROC, may it be NAFRA or QRB or anybody in this world, correct, their expectation, whatever judgment you have taken, wherever you have applied your mind, it should be there on your audit file as an documentation. Before I move on to this thing, let me just one more question. So CA Mohan took the help of the actual determining the estimate made by the management report for calculation and provision. So how he will include that in the report? So one we got and we got good responses. So if you have any questions, please keep on asking those questions in the chat box, in the Q&A box. So we'll keep on answering those. Maybe 10 to 15 seconds more on this question. I think fair, I think good response. And the question was mainly that what statement he can make in the auditor's report. Precisely, he cannot make any statement in the auditor's report. If he has used the work of an expert, it does not reduces his responsibility. Whenever you you rely on the work of another auditor under SS 600, you can share your responsibility. But whenever you are using the word of expert, you cannot reduce your responsibilities. Fine, fair enough. Yes, at times what happens that in case of a listed companies, correct, there are a concept of giving CAM, key audit matters, correct, where CAMs are mainly in respect of judgmental areas, including valuations of value in use, whether PP's impairment is done or not. In those cases, one of the procedures which is stated by the auditor is using the work of an expert to determine the value in use, may it be a management expert, may it be an auditor expert. But again, it is, yes, they can very well claim that yes, it is solely the responsibility of the it is solely the responsibility of that particular expert. But at the same time, the overall responsibility lies on the auditor. He cannot carve out this just by completely relying on the work of expert. He has to do some assumption testings, methods, and everything. So now moving on to this last recap, I think this is what we discussed, not much. Moving on to the last standard for the session, which is using the work of an internal auditor. It is, I have not seen so much being used in India. Yes, outside India, this is being very used. It means that an internal auditor which is appointed by a company or an management, can you use their work or not? So this standard does not, obviously it will apply when you're planning to use the work of internal auditor. So you want to leverage their work into your auditor. Sometimes management tells us, boss, you are testing a lot of transactions. Our internal auditor also testing a lot of transactions. Why can't you rely on them? It's simple. That's a basic management expectation always, to rely on, to expect auditors to rely on the work of the internal auditors. But it's not that simple. It is unlike SS 600. Again, I say is where you can rely on the work of another auditor and just carve out your responsibility. All other standards doesn't give you that flexibility to rely on somebody else and wash your hands off. Ultimate responsibility always lies on you as an auditor. Yes, there are few areas where you can leverage the work of another expert, another internal auditor, joint auditor, but one of them is internal audit function. So for them, there are two ways you can use this. One, are using the work of the internal audit function. Either whatever internal audit they have done, like say you are doing ICFR reporting, which is very common in any company. Like say they have done the ICFR testing, they have tested the 25 transaction, 10 transaction, 15 transactions. So do you want to rely on them? Yes, you can rely on them, provided few checks and balances you have done. Or if you want management to allow you to direct internal team to do the work for you. For example, it can happen theoretically allowed that instead of your team doing the work of stat audit, the internal audit team doing the work of stat auditor and directly reporting back to the internal auditor, sorry, stat auditors. So that concept is allowed, which we call as a direct assistance, but where your supervision and review work has to be very, very critical. But for all this, three things is must. Number one, what is the objectivity of the internal auditors? That's a most part. One is the objectivity of the internal. What do you mean by objectivity? Objectivity means are they able to execute the work without any biasness? Are they able to work without any without any undue support to the management? Are they acting independently or not? That is what the one objectivity means. Second is competence, as the word says, that are they competent enough to do the work which you want to rely on? That means, do they have that adequate staff? How many number of chartered accountants are there? How many number of technical staffs are there? So on and so forth. And lastly, whether the internal audit function applies a systematic and discipline approach. Systematic and discipline approach means, are they planning their internal audit areas at the beginning of the year? Are those areas being discussed with audit committees or CFOs or management? So is the entire audit of internal audit function is being executed on a very systematic manner, or it is being done on a very haphazard manner? So this all three factors will enable you to decide whether you should rely on the work of internal auditor or not. If as an auditor you want to rely on the work of, if you want to use them, provide for direct assistance. For example, at times it may happen that you really need to complete the assignment and you don't have sufficient staff. You can tell the management that your internal auditor will work for me. Obviously, you will pay them. I'm not going to pay them directly. The payment of the fees has to be done by the management directly, but they will report to me completely. In that case, two things you need to obtain in your file. One is the internal auditor will be allowed to follow your instructions. That agreement and concurrence has to be done by the management. Secondly, whatever task you give them, they will keep it confidential. So please make sure these two things are there. If you are using their work of, provide direct assistance. Communicate those charged with governance. If you are not using their work of if you are using the work of charge as direct assistance, then obviously you need to communicate to the audit committee also that yes, you are going to use the work of the internal audit function. Read their reports always. What is the quality of the reports? Are there any outcomes or not? And then obviously, as we see that normally we do in case of any audit, that we read the internal reports, we try to determine what are the work they have done, whether they have done sufficient work or not, and whether that is reliable or not. But there are few areas which the standard says that you cannot rely the work of the internal auditor. One is the risk of the material misstatement, where you believe as an auditor, stat auditor, that yes, this is sales is a risky area, significant risk, fraud risk, then you will not do. Sufficiency of the test performed, you cannot do lot of tests with them. Going concern assessment has to be done by them. It cannot be done by, going concern assessment has to be done by you. It cannot be done by them. Higher risk estimate or adequacy of the disclosures in the financial statement and matters affecting the auditor's report. So if I were to simplify this, wherever there is a high risk or wherever there is a deliverable involved, that means financial statement disclosures, auditor's report, or high risk of the going concern, high risk accounting estimates, you cannot involve the internal audit function. You have to do it on your own. So basically, with the areas which are of the low risk areas, where the chances of errors and omissions are less as per your assessment, can be assigned to the internal audit function. Like, what are the areas? The next question comes. One is operating effectiveness of the control. If you are doing ICFR reporting, the transaction testing can be done by internal auditor. Physical verification can be done by internal auditor. Few substantive tracing of the transaction, compliance with like checking of challans, and the what do you say? The verification of TDS, provident fund, and everything can be done by the internal audit function. So these are the areas where the limited risk is involved, and these are more of a monotonous or tracing work rather than a area wherein application of mind is done. So as I summarized, I have little bit gone fast on this standard because this is very rarely used in India. This standard is done, and I know that our fellow chartered accountant firms generally don't prefer to use the work of internal auditor unless until it's very rare in the circumstances. So just to summarize, there are two options, or one is internal audit functions where the management appoints them and the scope is determined by the management. The internal auditor reports to the management directly. They do the work on their own. And their outcome is an internal report, and there is no agreement between you and them. It's just that you take their reports, you read those reports, you evaluate their competence, objectivity, and discipline and systematic way of working, and then basis on all this assessment, you decide whether the report which they have already issued can be used to reduce your work or not. As simple as that. Whereas in case of a providing direct assistance, you give them the instructions. As again, let me tell you, the fees is paid by the management, is not paid by you, but you give them the instructions. They report back to you that, okay, you told them go and trace or go and check 50 transactions. They check all the 50 transactions. Direct internal auditors, how do you select those transactions? What are the basis of the sampling? How do you do the documentation? And there has to be a prior written agreement between you and the internal auditor has to be done. So these are the two different ways where you can leverage the work of the internal auditor. One on which where they already worked and you want to leverage it. One where you want to specially give them the instructions and you want to use their work. Documentation, very, very important. One is that how did you concluded on the competency, integrity, objectivity of those internal auditors? Who has reviewed the work performed by them and in your firm as well? Whether the work prepared, the working papers which are prepared by them are being written in your file or not. Key considerations: treatment of the findings. If there are exceptions, how you are going to dispose it. Local laws and regulations, and the most important part again is the documentation which we use. That how do you assess their competency and all, and whatever instructions which you have given, it should be on the file. Whatever minutes of meeting you guys have done, that should be there on the file. And finally, the internal audit report which is being used, which is being issued by them, and the concurrence that there you are going to rely on their internal audit report. So with this, let me take this Q&A. There is one question. Since there is now a reporting requirement under CARO that the statutory auditor has to report that the signed reports of internal, does this impose any responsibility statutory auditor to rely, use, consider the finding of the internal auditor? These observations can be ignored, avoided since this is doing it. So the question is a nice question, that if now under CARO, all the statutory auditors are expected to report whether the internal audit function is adequate to the size and nature of the business. Correct. And whether the finding internal report has been considered by the management. Now that reporting requirement doesn't impose you any restriction to rely on the work of the internal auditor. That assessment you do considering the size and the scale of the operations, and you find that fine, whatever areas they have chosen to do the review, whatever areas they have executed for the internal function, it seems to be appropriate over the period of 1 year, 2 years, and 3 years. Then obviously there is no formal need to fall back on the standard to enable the reporting under those CARO requirement. I hope that answers the questions. And secondly, it is also stated that yes, whether if there are any findings of the internal auditor, like internal auditor said that there are 3 controls failed and there are 3 transactions which was not approved by a particular competent authority. Can you just ignore and say that that since you are doing an independent audit of the financial statement, you are not going to consider all these findings, you just keep an eye shut? No, that is not right. If there are any negative findings on paper formally by the internal auditor, there should be a disposal in your file. What did you do with, either you consider those findings as very, very immaterial, or you go and check back with the men, are those an exceptional or rare cases, or is there a severe control failure which is happening, which was not picked by you but by the internal auditor? So you cannot ignore those findings just by closing your eyes. You have to do some work on disposing those findings, just to make sure that whatever impact it has on those exceptions on your auditor's report is done appropriately. So before I move on to this thing, I think there was one more question. Okay, I think we can skip this for the time being. And now moving on to the last part. These are the key findings of the regulatory reportings. Regulatory reportings means NAFRA, QRB, and those things. Joint audits, there was a question, not preparing audit documentation for the audit procedures performed for the ODI as assigned. Using the work of another auditor, not advising the auditor use that, auditors use that it to be made of the other. So you as a principal auditor didn't communicate it to the subsidiary auditor that their report will be considered for the purpose of the CFS. Okay, so that communication has to be there. And secondly, you never coordinated with them at the planning state that yes, the subsidiary which you are going to audit has this much of the risk, has these are the two significant accounts which you should work on, which you should emphasize on. So that was not there. Third was that in case of an auditor's expert, competence, capacity, and objectivity was not there on the file. Very, very important. Like I will give you one example, maybe it may not be that relevant, but I have faced in my life that I was doing an audit of a Indian corporate entity, and for a particular matter, they have taken a legal opinion of a very renowned opinion in a renowned legal expert in India. Let's say for the sake of for the sake of discussion, anybody, Mr. Harish Salve, Ram Jetmalani, Salman Khurshid, anybody, they are all renowned expert or legal opinion. So management has taken that opinion for a particular matter, and we have kept those opinions in the file. When we went to the review by the regulators, they said, boss, you know, as an Indian, or you know, as a individual, that these are very renowned people. But if somebody independently reviews, your file doesn't speak the competency of these people to give this kind of opinion. Why is there missing? Somebody picks up this file after 5 years or 7 years. You never know to what extent this gentleman were reliable or not. So therefore, there has to be something in your file which determines the competency of those people whose expert opinion you have relied on. And the second one is the completeness and accuracy of the source data. This is again very, very important. As I said, that whatever source data goes into the management assumptions and valuations or impairment testings, that has to be duly validated by those. And lastly, using the work of internal auditor, conclusions regarding the adequacy of the work of internal auditor is not done. Copy of the internal audit report was not on file. The system and disciplinary approach was not there. So these are more coming from the QRB piece. But mind you, again, the way we or the nowadays management's operations are expanding, it is going beyond normal routine life. It is not only possible by one firm of chartered accountant to have the doing the audit completely. There will always be debate by institute that whether we should allow multidisciplinary firm or not, that a lawyer and a chartered accountant can become another form of where both of them can serve the clients or not. So all those things are coming into picture. So that's where I think the message is very clear, that whenever you are relying on the work of another, any other, may it be your joint auditor as a peer professional, or may it be an expert on whose work or whose numbers derivation you have relied on, derivative valuation, actual valuation, or anything, or may it be another auditor whom you have just involved for the purpose of physical verification. Important part is always verify what is the competency of those persons. What is the objectivity? Are they being unbiased? Are they can do the work without getting influenced by the management? Obviously, they are being paid by the management, so independence is always an issue. Whether their fees arrangements are result-based or fixed-based. What is your past experience with those people? How do you verify the assumptions and the most important part, the source data of all these things? If you are relying on the work of internal auditor, are those people giving a good quality internal audit report? Are the approaches being taken systematic or not? So all those things are there, but most important, just to summarize, that always keeps minutes of meetings in your file. This has been continuous stress by NAFRA, that you discuss with management, you discuss with a lot of authorities throughout the period, but it is nothing there on file. Work allocation agreement, wherever you appoint anybody of these 4 pillars, you have to have your work allocation agreement. And finally, whatever conclusions are being done, whosoever concluded, that has to be there in file. It cannot be left unattended. So these are the very basic part of this 4 auditing standards, and I'm just trying to finishing on the time, and I don't have any questions on the question board. There are a couple of raise being hands. I'm sure that yes, there is much more to discuss and debate on all this 4 standard of auditing. But as rightly said by Rahul Bhai and the chairman sir in the beginning, that the objective is just to familiarize all of number 3 things. This kind of standards exist. What is the need of the standards? And first and lastly, I would say that don't think that these are being rule-based standards. These are being developed with some logic to enable you to face the regulatory inspections in future, because we are not in a business of, or we are in a business which doesn't involve, our services are not, I would say, it's not limited to 1 day or 2 days. Up to next 7 to 10 years, anybody can come and question us. Why didn't you do these things before 5 years in audit? Why didn't you do these things before 4 years in an audit? And therefore, all those things on your file, on your audit work papers will help you to sail through in future, not today. The more efforts you put it today, the more secure your future is, and the more responsible or more quality work you can give it to your client. So there is last question from somebody, where what are the reporting implications of a statutory auditor if the internal auditor is found not an independent person, or a management expert is not competent independent? Do we need to qualify the main report or the IFC, or both? If you don't found the internal auditor or the management expert competent enough, then obviously you don't consider their outcome as report. So then the management has to either give you any alternative ways to get satisfied yourself with whatever they have done. Like say, for example, management expert, right? They have done the fair valuation of the PP, and you found that this guy is not a competent guy itself. Then the fair valuation which was done by them is full in question mark, which can result into the qualification depending on the severity of the numbers in the financial statement, or IFC as well. Yes, to answer your question, it can go into the qualification of the main report or both report. Hope that answered the question. So that all depends on the severity of the number. So that's all from my side. As a matter, I would be sharing this PPT with the WIRC team, and then they will share with the larger forum. And apart from that, Madam, Pinky ma'am, I will also share a 2-page of a document, which is like whatever I have spoken, what kind of minimum documentation one should keep in file. So that Word file, which I also share, that people can be handy. But again, the fear which I have in my mind, that the moment you give somebody a small capsule, he or she forgets the basic need of running or reading the standards. So please never never feel that these standards are too lengthy to read. I think these standards are somewhere aged in 2002, 2004. These are not more than 4 or 5 pages. But whenever you are using the work of an expert, please ensure, or whatever you are doing, you go through the standard and familiarize yourself. That's all from my side, and apologies for 1 or 2 minutes technical glitch in between. Otherwise, I think it all went through, and thank you for all the participants. And I can see that almost 750 people are live, and I got responses from almost 400 or 450 people in the polls. That makes me confident that people are listening to me and people are attending. Over to you.
Yeah. Thank you, Shreyans ji. Actually, we are very much lacking in our audit documentation or creating audit evidence. Whatever the disciplinary action taken on the CA, because of they didn't have any audit evidence. ऐसा नहीं है कि उन लोगों ने काम नहीं किया था या उन्होंने गलत काम किया है, बट मोस्ट ऑफ द केसेस में उन लोगों के पास में ऑडिट एविडेंस नहीं थे ये बताने के लिए कि उन्होंने करेक्ट किया है या उनकी वर्किंग क्या है या वो फिगर पे कैसे आए, या उनका जो ओपिनियन उन्होंने दिया वो किस बेसिस पे दिया, तो उसकी वजह से उनके ऊपर डिसिप्लिनरी एक्शन हो रहे हैं.
And you know, just one thing to add, whatever judgment we take as a CA or a practicing CA, it can go wrong. Yes. There is no doubt about it. But if we have written, why did I take judgment at amount of time? Hindsight में after 5 years, anybody can tell me कि boss आपने 5 साल पहले जो सोचा था वो गलत था. वो तो 5 साल के बाद कोई भी easily बता सकता है. But my file should speak, my evidence should speak कि मैंने ऐसा judgment उस दिन क्यों लिया.
सर हम लोगों को बचपन से जब हम कोई भी क्वेश्चन कोई भी एग्जाम में जाते हैं, कभी जब क्वेश्चन आते हैं ना कोई भी केस लॉ के लिए, या ऐसे पूछते हैं कि इस क्वेश्चन का आंसर यस या नो क्या होगा एंड जस्टिफाई योर आंसर। तो वही चीज मतलब बचपन से ही बताई गई है कि तुम्हारे आंसर को आपको जस्टिफाई करना है कि आपने वो आंसर पे कहाँ कैसे पहुंचे, आपके ओपिनियन पे कैसे पहुंचे। एंड बिलीव मी कि इस बार भी मैं हर साल मेरे कोई जो भी नए क्लाइंट आते हैं उनसे यही झगड़ा होता है। दे आर सेइंग कि हमारा प्रीवियस ऑडिटर तो इतने डॉक्यूमेंट नहीं मांगता था, आप जितने डॉक्यूमेंट मांगते हो।
करेक्ट।
आपको इतने डॉक्यूमेंट क्यों चाहिए? ऐसा भी हो सकता है कि मेरे प्रीवियस ऑडिटर ने ज्यादा डॉक्यूमेंट लिए होंगे, बट वो ये दिखाने के लिए कि मैं ज्यादा मांग रही हूँ, मैं उस पीयर प्रेशर में मैं उनको बोलूं कि नहीं ठीक है आपने पुराने वाले को जितने दिए थे उतने ही दे दूं। दिस इज द टेक्निक क्लाइंट्स आर यूजिंग, बट एज ए चार्टर्ड अकाउंटेंट वी शुड सेव आवरसेल्फ कि नहीं, हमने जो भी ऑडिट कर रहे हैं या जो भी कर रहे हैं हम आपके पास एविडेंस रखेंगे। तो हमने यदि रॉन्ग, जैसा सर ने बताया कि हो सकता है हम ह्यूमन बीइंग है, हमारे आंसर भी या हमारा जजमेंट भी हो सकता है कि गलत हो जाए, बट इफ इट इज सपोर्टेड बाय द ऑडिट एविडेंस वी कैन हैंडल इट if any
Correct.
action or any disciplinary action will be taken on us.
Yes,
तो
exactly.
सर और दूसरा सर क्या है ना कि हम लोग सीए होके भी, और जैसा हम लोग ने कई बार ये हम लोग आपस में बात करते हैं, हम लोग स्टैंडर्ड और अकाउंटिंग स्टैंडर्ड बहुत पढ़ते हैं, बट ये सेफ ऑडिटिंग स्टैंडर्ड कोई नहीं पढ़ता, जबकि हमारा वर्क, हाँ जबकि हमारा वर्क है ऑडिटिंग स्टैंडर्ड ज्यादा पढ़ना।
Yes, exactly.
We are not doing accounting, so why we are we are doing auditing. So we should read auditing standard once in a year at least at the time of audit. लेकिन कोई नहीं पढ़ता, ज्यादातर फोकस अकाउंटिंग स्टैंडर्ड पे ही रहता है, क्योंकि हम जब ऑडिट रिपोर्ट देते हैं ना सर, उसमें हम लोग को लिखना होता है कि एज पर अकाउंटिंग स्टैंडर्ड दिस 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 ये हुआ, एज पर अकाउंटिंग स्टैंडर्ड ये फॉलो हुआ, बट मैक्सिमम रिपोर्ट में आप देखेंगे स्टैंडर्ड ऑन ऑडिटिंग का कहीं भी मेंशन नहीं होता है।
And the contrary is कि आप नाफरा के रिपोर्ट पढ़ो, क्यूआरबी के रिपोर्ट पढ़ो, they are picking each and every line from the auditing standard कि बॉस ये स्टैंडर्ड था, डिस्कस आपको मैनेजमेंट के साथ डिस्कस करना था, आपने किया या नहीं किया। They are not questioning कि अकाउंटिंग स्टैंडर्ड का क्या हुआ। Nobody is questioning first. People are questioning on the process.
तो वही अभी हम लोगों का इन WIRC वी आर इन ऑन बिहाइंड की वी शुड मेक अवेयर आवर सीए की स्टैंडर्ड ऑडिटिंग इज मोस्ट इम्पोर्टेंट, अकाउंटिंग स्टैंडर्ड इज इम्पोर्टेंट, बट मोर इम्पोर्टेंट इज स्टैंडर्ड ऑफ ऑडिटिंग फॉर अस। सो and your presentation is so lucid and so well explained and पूरे easy language में, और आपने सबसे मेन तो आपने जो इस समय भी सबको जगा के रखा, बीच बीच में जो पॉपअप क्वेश्चन देके फ्लेवर जो दिया, तो उससे सर समझ में आ रहा है कि आपका इस सब्जेक्ट के लिए कितना डेडिकेशन है, कितना पैशनेट है आप इस सब्जेक्ट के लिए। एंड थैंक यू सर आपका टाइम देने के लिए, इतना अच्छा प्रेजेंटेशन देने के लिए, कि मैंने सोचा था कि ठीक है मैं थोड़ा और भी काम कर लूंगी, बट नहीं कर पाई, मैं आपको ही सुन रही थी पूरे टाइम।
Thank you very much. That's so
तो इट्स वाज वेरी वेरी नाइस। तो हमारे इवन ऑडिट एविडेंस के लिए तो मैं ये बोलूंगी कि हमें जो हम जो सोच रहे हैं ना वो भी हमें लिख लेना चाहिए उस क्लाइंट के बारे में। उस समय खाली ऑडिट एविडेंस हमको क्लाइंट से ही नहीं कलेक्ट करने, हमने हमारी भी जो वर्किंग बनाई है वो भी रखनी चाहिए थर्ड पार्ट। आप अदरवाइज वो बहुत बार काम आती है कि जब हम नेक्स्ट ईयर का कुछ कर रहे होते हैं या कुछ बीच में क्लाइंट को कोई भी सजेशन या वो कर रहे हो डिस्कशन कर रहे होते हैं, हमारी वर्किंग भी बहुत बार हेल्पफुल होती है, क्योंकि हम सबका कुछ याद नहीं रख सकते, सब कुछ वर्किंग की हुई रहती है और ऑडिट एविडेंस में रखा होता है, तो हम उसको कर सकते हैं जस्टिफाई।
मैं 2 महीने पहले क्या किया था वो मुझे याद नहीं रहता है, अगर कोई आके पूछे 2 साल पहले आपने कैसे किया था बताओ तो कैसे याद रहेगा।
करेक्ट। सो थैंक यू सर, थैंक यू ऑल द पार्टिसिपेंट for your passionate hearing, and अभी तक भी यदि इतने लोग हैं तो इससे समझ में आता है कि they are more passionate about this and they want to equip themselves with this auditing standard. So on behalf of WIRC and on behalf of all participants, sir, I want to thank you for your learning and all this presentation.
Thank you very much.
Thank you.